Hey traders, welcome back to another Sunday video where we take a look at markets, setups for the week ahead. We talk about market news that could be important to your trading account, as well as gold, the dollar, stocks. I'll give you all my thoughts on that today, as well as take a look at the COT reports, which came out very interesting. We'll also be talking about top setups that I'm looking at myself, as well as my very own current positions. Let's get in. And before we get too far into this video, let me remind you guys, if you have not seen already, we are currently doing a huge flash sale on the Edge Finder. It is currently 45% off, which is a massive discount to what it is usually priced at. If you would like information about that, I'll show it up on the screen one more time. Down below in the description, there's a promo code YTVIP and a link for you. If you have been thinking about getting the Edge Finder, I am telling you this now. We are planning to restructure and reprice some of our tools. Right now, if you get this price, you'll be locked in at the wonderful discounted prices that we are currently doing. So check it out down below in the description and let's jump in. So first of all, let's have a look at how things left off last week. What we can see is that the S&P 500 kind of gave back some of its gains towards the end of the day. Same thing with the NASDAQ. If you're taking a look at the Dow, same story. And the dollar index actually found a little bit of a bid towards the afternoon, second half of the day. We'll discuss about what that could have possibly been once we get to oil in just a second, which had a huge jump. The euro dollar traded higher throughout the day and then retreated on the dollar strength. Same thing for the pound dollar, and gold actually followed suit as well. So what was this big oil sort of situation? Well, there was some drama in the Middle East towards the end of the trading day, which caused, again, a surge in the price of oil. And if you follow my channel regularly, then you probably know I was long oil and I got trailed out right here before the run up. Really painful stuff. As you can imagine, I missed out on several hundreds of dollars, if not $1,000 plus on this trade because of getting trailed out. But hey, you know what? Nobody's perfect. Trading happens and we move on and we keep constructive with it. And in case you're wondering what happened in the Middle East, it seems pretty clear here. So we have Houthis attack British-linked tanker Marlin Luanda in the Gulf of Aden. So any sort of drama escalation in the war, of course, is going to draw a little bit of concern around the supply and demand of oil story. So that is why we saw prices spike. And having a look at the week ahead here for you, what we can see is we have consumer confidence on Tuesday, as well as JOLTS job openings, two things that I'll be watching out for myself. We have ADP on Wednesday, which is an advanced look at the NFP report that comes out on Friday, which is going to be the big one this week. Also, Fed funds rate, FOMC statement, and press conference. These will probably be highlight moments of the week. I will be live streaming during these events for you if you'd like to tune in. But that should be really interesting to hear from Jerome Powell on whether or not they're going to stay kind of the course that they've been going or back up a little bit on the dovishness that we've been hearing. Same thing, that will be really important. We also mentioned the Bank of England also will be announcing their bank rate, which could be volatile as well if you're a pound dollar trader or pound pairs in general. We have manufacturing PMIs and unemployment claims on Thursday. And to end out the week, we have two big ones. We have the consumer sentiment as well as NFP job data comes out Friday. So it is a really big week. And having a look at the charts, we can see where we left off with the US dollar last week. You can see prices remained pretty range bound. And I would imagine also, by the way, a little bit of the dollar spike towards the end of the day could have been off of the back of that, Middle Eastern conflict that we saw. If that does flare up again, the dollar can be treated as a safe haven in many cases where other currencies will get sold in favor of the dollar. So could that have been the case? Maybe, but also might have just been a little bit of a bounce back. We've been seeing a lot of strong economic data out of the United States, which has been keeping this thing range bound. Why? Well, because you've had some inflationary numbers that come out, good in the inflation department, meaning inflation coming down, cooling further. So that is bad for the dollar, right? Because that decreases the chance of rates staying higher for longer. But at the same time, the strong U.S. economic data like GDP, advanced GDP that came out hotter than expected, PMI numbers, retail sales, you've had a lot of strong economic data, which has supported the idea that perhaps perhaps rate cuts are not going to come so soon. So that's why you're getting this very range-bound, choppy dollar, market. And by the way, when we hear from Jerome Powell on Wednesday, I believe, Wednesday, that will be likely very telling as to whether or not we're going to potentially break out if they acknowledge, hey, some of that economic data is looking a little bit strong for us to rate cut right now, or if they acknowledge the inflationary stuff. Those are the two things I'll be looking out for. Again, I'll be live streaming that event, so make sure to tune in for that. But right now, for the dollar index, we are range bound, and I'm looking for confirmation either direction. If we break to the downside and we get, a very dovish sounding Jerome Powell and perhaps really cooling jobs numbers this week, I'll probably have to put to rest my dollar bullish idea right now. But if we do see them acknowledge the economic data and we break out through these highs, very solid chance that I could actually be looking for some dollar longs this week. So should be really interesting to see what goes on there. You can see what happened to the price of gold this week. Pretty similar story, very range bound, lacking sort of any major direction when it comes to gold spot price. What we could see, especially last few days, just really choppy. And this is because, again, the gold market is listening to what the Fed and the dollar is saying as well. If that dollar becomes really strong, meaning, they acknowledge, hey, this economic data is looking real strong, we might not be able to rate cut soon, down goes gold most likely, right? But vice versa, we might see the opposite. So what are we going to see? Well, here's my very personal opinion. I think that they're going to acknowledge the economic data in some capacity. I think that there may be a pushback on this idea that rate cuts are coming. Now, that's not necessarily the popular consensus. A lot of market participants think, we're going to get those rate cuts. And if that does happen, then I will say this, I'll be the first one to admit that I'm wrong in thinking this, and I'll probably look to go long gold. But I'm thinking that there's a solid chance we could actually see breaks lower, because I think that all this strong economic data could actually concern the Fed a little bit, in the idea that if you have too much economic data that's strong, it could just lead back into, we're back to sort of an inflationary problem. And that's where things get really interesting for, for stocks, for currencies, etc. Speaking of stocks, here's the S&P 500. We'll pull it up so that we can stay, in tune with this concept for a second. If the Fed raises, raise rates, if they cut rates, the stock market's going to probably like that in the short term, right? Because that's going to be like, oh, look, that's stimulative. Businesses can borrow money at a cheaper rate, hire more people. People have more money in their pockets. They can, buy houses a little easier. So all of a sudden you have a little bit of stimulus in the economy, and that could be very good for stocks. At the same time, though, if you do get suddenly an environment in which the Fed is like, hey, you know what, we're going to take this slow, it's going to possibly throw a little cold water on this really exciting run-up, this super hot run-up, could see a little bit of a pullback. And in my personal view, that's where I am in the camp of. Now, I'm not short, I am not bearish on the S&P 500. However, I am thinking that short term, we could see a bit of a pullback, and you may even see more of that when looking at something like the NASDAQ. Here's the NASDAQ, which sold off here towards the end of the week and is resting near a key level of support. Now, will I buy this support level on a dip? If I do, it's going to be a small position, because I do think that, again, the NASDAQ stocks really, really run hot, led largely by semiconductors, which, if you want to get fancy with it, you can take a look at SMH. This is the semiconductor ETF, and you can see it really sold off hard. So when looking at the NASDAQ, you have to actually ask yourself, what's actually in the NASDAQ? What stocks are in here? Well, it's a lot of semiconductors. It's a lot of tech companies. It's a lot of finance companies. And so, they are in some ways sensitive to what the Fed decides to do with those rate cuts. And again, if we don't get rate cuts, I imagine there's a good chance we actually could see a slip underneath this level of support and retrace further when talking about the NASDAQ. Moving on to currency pairs for a moment, I wanted to show you guys this new feature on the Edge Finder. This is the Bank Forecasts section. If you click this, if you do already have a copy of the Edge Finder, click Bank Forecast. Check this out today. It is very, very cool. So what this does is we have a bunch of research teams from various banks that report their forecasts for a large selection of different currency pairs and assets. And what we've done with the Edge Finder is we've gone ahead and scraped this data, grabbed this data from various places so that we can take a look at what these bank teams are pointing towards in terms of where they think markets are going. These are City FX. These are big players. Bank of America FX, Goldman Sachs Global Investment Research. We're looking at their overall forecast for things like we've got the euro dollar selected. So for currency traders, check this out. This is really cool. You can select any of the different currencies that you'd like from this list, mostly USD pairs. They have a lot of forecasts on them. And if we take a look at the euro, this is a good example. So City FX thinks 1.10. Then you have, CIBC World Markets Team putting it at 1.06, 1.0566, 1.0692. So the point is you have kind of a wide range. So what we did in the software side is we said, okay, we'll take all these numbers that we're pulling in. We're automatically pulling that data in. That's great. We could see these individuals, but what's the summary? And that is over here where we got our average targets, both monthly and quarterly. So this is really cool stuff, and I'm really excited to have this on the Edge Finder now. So if I go take a look, for example, at the euro dollar, and again, let's remind ourselves, we said the average target amongst these research teams is 1.08 for the euro and against the dollar, right? So if we take a look at this and we mark really quick, let's do a little test here. Let's say we go here and we punch in the coordinates 1.08, right? That was their average target. Look at that. Now we have 1.08, and this is their 1 month target on average. Now, of course, I'm summarizing what all these teams are thinking overall with this monthly average target. And we can see, boom, that's so cool because now we have it on our chart. And you could do something fancy if you wanted to, bank forecast 1 month, right? So if I took that and then I scroll that and then I just want to make that a little bit more legible, I mean, check that out. So now suddenly you have this on your chart directly from the Edge Finder. You can see where banks are forecasting. So they think there's going to be, it seems, on average, a drop in the euro, perhaps on stronger economic data from the US, which is a really interesting story to keep an eye on. Of course, overall, I would say that the euro is pretty range bound, but if they're seeing some macro stuff that's kind of pointing more towards, okay, the dollar could stay strong in the short term and push us back through the lows, it's very interesting to watch out for what those research teams are pointing out. And again, you can get access with that with the Edge Finder. We just finished putting that tool together. And I will also say we could also take a look at the pound dollar just since we're sampling it here. Let's go see what the pound USD has to say. So let's go switch over to pound USD. Boom, there it is. And we can see that we have a lot of sources here. We have Citi, we have the National Bank of Canada, RBC, we have TD Securities Research Team. We have all these teams, and their summarized view seems to come out to about 1.24 on the pound USD for the 1 month target. So let's go take a look at that. And again, this is interesting because 1.24 is a ways away. That's a slip all the way down to this area here. So that's kind of a ginormous move. So they're thinking that a 1.24 is all the way down here. So they're thinking there could be a pretty substantial drop in the pound. I thought that was really interesting to keep an eye on. So we'll continue to monitor this, and maybe I'll show this more often in my videos if you guys like it. Or like I said, if you do not already have the Edge Finder, don't forget, we're doing our Edge Finder sale right now. It is currently 45% off with code YTVIP using the link in the description. Get a copy yourself, use this data. If you think that this sort of stuff would be useful to have in your day-to-day analysis, do not hesitate. Take advantage of the sale price. The reason I'm saying it and the reason I'm kind of admitting that this is a sales pitch is because we had a conversation on our team this week about how we are planning to restructure pricing, and it's only going up because we've added so many features. We have a lot of maintenance costs. There's a ton of overhead if you think about it behind building these tools, administrating them, working with customers who have questions about them. There's teams of people on the training, or not teams of people, but our team has people on it that train people with it. So I'm trying to stay transparent about this. We do plan to raise prices, so get yourself a copy before the price goes up. And with that said, I want to keep going here with a couple more things that I wanted to show you. So again, pound USD range bound, same thing with euro. But if you get breakouts here to the downside, like I said, it very quickly could turn into a bigger move if you're able to break like this 1.26 level, which has been a pretty key spot for price recently. You can see we've come down aggressively into this area before finding buyers several times previously. So we're looking for that price action signal as well as confirmation from the edge finder, but I think it's very interesting to see overall. We could take a quick look at COT data, see what institutional money is doing overall with their positioning. We can look at the COT filings here, and we can see that the latest filing came in pretty dang interesting. US oil was a huge net bullish move. And again, that was painful because I got stopped out, well, not stopped out, but trailed out for profit on my US oil trade just before it kept on without me. I'm sure all of us have been there before. It's a little bit painful, but regardless, we push on. So US oil was a big one. US 10-year bond, that was a big one as well. That was interesting to see. You had the Nikkei, you had the Canadian dollar. These are your assets. I'm referring to this column here, the net percentage change. These are where institutional traders have made the biggest purchases, the biggest moves in the latest filing. US dollar got a slight bid, the Dow, gold, ZAR, NZD, CAD, etc. On the flip side, I found this very interesting to my idea that we could see a pullback coming in the NASDAQ. You had NAS 100 here at, a pretty steep sell. SPX, slight sell. JPY, AUD, Euro. Again, feel free to pause the video if you'd like to take a closer look at this, but should be really interesting to see. This is, of course, the week-to-week institutional money flow, a very important indicator that we look at every single week for a good reason. It's very important to keep an eye on. Another thing I wanted to show you guys was the seasonality scanner. This is kind of key because we are turning the page to February. This indicator allows us to look at seasonally what things typically move the most, whether up or down overall. So in the month of February, right, this next month, we do see things like the VIX ticking higher, Bitcoin, gold, NAS, US oil, right, JP225. Oil is interesting because you do have, you had that big institutional buy this past week in the COT data. Pound CAD, and the Nikkei, 10-year bond, the DAX, the pound New Zealand. And then on the flip side, you can go down and take a look at the more bearish assets overall. A lot of yen crosses, which I thought was interesting. Pound yen, Aussie yen, Kiwi yen. So keep an eye on that. Slight bearish month overall for US 30. So very interesting to keep an eye on that seasonality. And remember, like I said, last call, I know I keep saying it, but don't miss it. There's all the information you need. I've showed you a couple different features here today. If this would be useful to you in your day-to-day trading, make sure to check it out down below. And here's a quick look at my personal performance so far this year. About 1% up overall in the month of January. Started out a little bit slow, a little bit rough, but those oil trades really played out, and we're sitting at a good spot. Up about $8,652. So not bad. Good start to the year overall, I would say. And we'll continue to push on and try and stay consistent here. And I'm going into the week a little bit light in terms of positioning. You can see I have my China ETF position, my technology ETF put that I've sold, which is likely to close for max profit this week. We have my XLE. This is my energy ETF position, which is also looking pretty good, especially after the run up in oil prices. I imagine that will do okay this week, and we'll continue to watch this stuff close. And just because I just spoke about it, this is my XLE, this is the XLE chart. This is the energy ETF. It has stocks like ExxonMobil, Chevron, big gas and oil and gas companies. And reason I'm partially bullish on this is because, again, they got quite oversold on some of my indicators that I use. The A1 indicator is pretty cool for this. It helped me to catch this position really well. These indicators are available on our website, a1trading.com, if you're interested in them. At the same time, tech ETF, which is XLK. I sold puts on this one a little bit of a ways ago. I actually sold it over here. My thought process was I was going to pick up some at 181 if the price kept selling off, but I sold that put and this thing proceeded to shoot to the moon. So I actually would have, if you know anything about puts, I sold puts, meaning basically I said if price keeps going down, I essentially promised through my contracts to buy this ETF at 181 no matter where price is at, prior at the date of expiration. So I made that bet. I was willing to buy the shares, but I did not even get my chance. I actually wanted that to hit. I wouldn't have minded at all. So instead, I just collected a premium for selling that put. And as the market rallied, I think I'll probably make about $2,200 on that trade. So not too bad. And if you're confused about what the heck I'm talking about with these ETFs, what is an ETF, Nick? You guys probably know I trade the NAS 100, and if you're familiar with like Forex brokers, that's what they would call it. It's like the CFD version is NAS 100. You could also see it as NQ and futures, QQQ on the stock market exchange, which is where I usually trade it. But I trade on WeBull. There's a link down below in the description if you're interested in using the broker that I do. If you're outside of the US, there's also some really great brokers down there that might be helpful to you. If you're looking for a new broker, again, the ones down below in the description, they have some great sign up perks attached to them, and they're ones that I recommend. They're regulated, no nonsense, no sketchy offshore brokerages being promoted here, right? So take advantage of those links down below in the description if you'd like to support the channel. They are referral links, just full transparency. You'll be helping me out if you do choose to use any of those links. And again, I use WeBull. That's how you can see all the position tracking stuff that I showed earlier in this video. I hope you guys have a great trading week ahead. I hope this was helpful to you. Trade safe, and we'll see you back in the next one.